In my last video, I talked about the tax advantages of keeping your home rather than selling it. All right, so now we're going to break down these costs and these benefits of keeping your home, even if you're paying up to $1,000 out of pocket every month on your rent. First, let's look at the depreciation deduction. The IRS allows you to depreciate residential rental property over 27 and a half years. Let's look at the formula. Depreciation equals the home value minus the land value and divide that by 27 and a half years. So let's say your home value is $700,000. The estimated land value is $200,000 since land isn't really depreciable. And the depreciable value then is $500,000. So you divide $500,000 by 27.5%, and that's an $18,182 deduction per year. Your tax savings, assuming a 24% tax bracket, is going to be $18,182 times 24%, which equals $4,364 in tax savings per year, or $364 per month. Now let's look at the property tax deduction. Let's assume property taxes in Oahu are 0.35% of the home value. The $700,000 times 0.35% equals $2,450 per year in property taxes. The tax savings is $2,450 times 24% equals $588 per year, or $49 per month. Let's look at your mortgage interest deduction. If your loan balance is around $600,000 at a 6.5% interest rate, you'll pay roughly $39,000 per year in interest. That tax savings equates to $39,000 times 24% equals $9,360 per year, or $780 per month. And then let's look at the other rental expenses. You have maintenance and repairs. Let's say that's $2,500 per year. You have insurance, which is about $1,500 a year. And then you have HOA fees, if applicable, and let's assume that's about $3,000 per year. Your total expenses then are $7,000 per year. The tax savings on that is $7,000 times 24%, which equals $1,680 per year, which comes out to $140 per month. So let's break down your total annual tax savings. Your total annual tax savings, $4,364 in depreciation. Property taxes is $588. Your mortgage interest is $9,360, and your other expenses is $1,680. You add that up, and your total savings is going to be $15,992 per year, or $1,333 per month. The bottom line, why renting out at a $1,000 a month loss still makes sense. You pay $12,000 a year out of pocket, but you get $15,992 back at the end of the year in tax savings. In 4 years, you gain $87,000 in appreciation, and that's assuming a very conservative 3% growth. Instead of losing $50,000 today by selling, you build long-term wealth and you keep a valuable appreciating asset. Like I always say, look at the short-term pain or that long-term gain. You're still on the fence. Let's run the numbers on your specific situation. DM me help, and I will sit down with you and go over your specific numbers to see if renting your home at a loss or selling at a loss makes more sense. Thanks. Have a great day. Aloha.